yesterday we saw our first kind of sell-off in the indices. And this is how crazy the indices are right now, guys. They're so bullish. They're so like they've pumped so far so fast that yesterday's move looked like the steepest sell-off we've had in a while. And it wasn't even that big, right? When you actually look at the full picture, the indices, I have said this many times. I'll repeat myself here for a moment for people who are maybe tuning into the stream for the first time in a while, or just tuning in for the first time ever. I like the indices to the long side for the most part, but I've been calling for, well, let me back that up. I've been waiting for a pullback in the indices, just because I think that we've had a really strong run, and I do see some headwinds in the financial markets that are not necessarily like, oh, this is doomed, we're going to crash 50%. I'm not saying that sort of thing, but I think the NASDAQ and the S&P are due for a bit of a pullback because of the recent round of data that we've gotten out of the United States. In fact, let's do some homework. I mentioned I was doing some work on the Edge Finder here before I came on stream. That's why I was late. We've got several projects that are just under maintenance between the internal side. But whenever we do maintenance, the cool thing is when it comes out the other side, it's always a better product. And we are constantly working to improve this tool. Anyways, I wanted to look at the dollar here. So let's get an updated view. And this is part of our maintenance project. Inflation came out, and it came out for the month of February. It came out and it actually ticked higher. So remember that the overall picture for inflation that the Fed wants to see, they want to see inflation continue to come down in the United States. What you've got here, guys, the blue is going to represent the US. You've got olive green and dark green for Europe and the UK. For the currency traders, or just generally speaking, even if you trade indices or gold, looking at these major economies is important. And why don't we throw Japan in there just for fun? Because Japan's kind of a hot topic in FX land. So let's talk a little bit about this. Okay, so, and it doesn't look like we have the latest data from Japan, but let me go through this really quick. So if you look at the major economies here, in fact, this is going to bother me. I need to just slide this out really quick so that we can see the full percentage. There we go. Okay, check this out. So if you look at inflation, and this is the core of like kind of all the drama in the financial markets the last few years, is what's inflation doing? Take a look at the UK and Europe and the US. First of all, they all ticked very high in inflation and have been coming down. The issue is that the Fed, to really cut rates, I've made this point many times, but this is a very important one. They want to see inflation hitting 2%, or at least what they've reiterated over and over recently, guys. And let me not miss the news. I got to get back over to the charts in a second. They want to see inflation come down to 2%. We've stagnated at current levels here. We haven't been able to continue that down trend towards 2%. That's keeping the Fed from cutting rates. And the stock market has not reacted to it. It's just basically said, yeah, whatever. They're still going to cut rates. We're going to stay bullish. So in my personal view of the financial markets, I am still bullish because I still think we probably see inflation cool off at some point. We probably do see rate cuts at some point, but I think we're a little overdue for a bit of a pullback. I think that this inflation stubbornness between PPI and CPI that we saw this week, in combination with some cooling jobs numbers, the market didn't really react the way I think it should have. I mean, it doesn't matter what I think it should have, but at the end of the day, for me to buy, I'm looking for a pullback. That's long story short, actually long story long on the indices here today. So
market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Let's take a quick look at gold. I mentioned this for a second. So we saw gold making some advancement early, kind of London sessions sort of area, an advance off of this low. Whoops, let me not break my stuff. So we saw a price bounce off of that. Now coming back, I'm actually kind of surprised by that because I thought that number would have perhaps actually given you a little bit more of a bounce factor for gold. Cooling in the economy alongside the sticky inflation this week, to me, is not necessarily a bearish environment for gold. So I'll say this, and I've said it several times, this is the second time we have retested this area of support. I bought on the first one, so I added another trade. I have 2 longs on gold right now. My first long was before the big pump, which I'm, obviously doing well with this one, but I actually added a second trade on this pullback here. At this point, my stop loss is very, very small. My risk on the first trade is tiny, and my risk on the first trade is second trade is very, very small, but my first trade, we're very much in profit. So if we do break this support level today, guys, that's going to trigger me out of the trade, and I will happily take profits and walk on gold and wait for another opportunity. But I'll say this, and I could be wrong, but I think this level will probably hold for now. From the data that I've seen this week, we've seen a trend. Eco readings have been kind of weak, but inflation readings have been pretty stubborn. In that environment, and I absolutely sound like a broken record, and I know that if you've watched my videos and streams, you've already seen me say this 15 times. I've been drilling this over and over on my content because sometimes I am a content creator and I am a trader. If I was only a trader, you know what I would do? If I was only a trader, not a content creator as well, I would say, this is the environment. I stay long gold unless we break this. And then I would go outside and take a walk, and I wouldn't look at this stuff until NASDAQ is tried to poke higher, pulled back. Gold, I would, like I mentioned, I will stop out, take full profits on my positions if we hit this trailing stop. It's not actually a trailing stop order. It is a stop that I have trailed. It's not automatic, but I've moved this stop here just below market structure. If that breaks, I'm out of my trade, and I will take that for the week. S&P, NASDAQ, I'd be interested to see if we can get some sell-off today. If we do sell off, if we get a similar reaction to the data that we saw yesterday, where we saw a bit of selling in the indices, personally, I will probably be looking to sell some puts on a couple different ETFs that I like. So if you guys are in the VIP room, I will probably be selling some puts if we get kind of a sell-off. And how would I justify a sell-off? Well, I'd like to see a spike in the VIX. If you get a spike in the VIX, I'll probably look to sell some puts. Retail sales, PMIs, GDP numbers, all of them have disappointed recently. So that, once factored in, will actually be a more positive thing for gold. So that we're working all the way, by the way, on some of those things. We have several maintenance projects that we're fixing. Retail sales is one of them, but once those are fixed, the score will probably adjust. We've neutraled it out in the meantime, but continue to watch for some setups there. The Australian dollar is getting a bearish read. That's kind of a new appearance. Let's take a look at that. Australian dollar, which has been selling off recently. We've seen some selling in let's update our chart here. I haven't even looked at this currency pair in 16 years. And here's the Australian dollar. Came up, retested 66.25, let's call it, and started to give back some of those gains. Again, it's getting a bearish read on the edge finder, kind of favoring, if you are a dollar bull, perhaps this would be the area. That's the only dollar cross that is getting a bullish or bearish read. So kind of interesting to see that. The DAX is still very bullish, Euro Kiwi, Pound Kiwi. I know one of our regular super fans of the edge finder, Dan Emerson, he, I think he said he was long Euro Kiwi. Yeah, long Euro Kiwi, Pound Kiwi as well. Basically, the edge finder's been pretty bearish on the Kiwi dollar specifically, which has turned out to be a really interesting call out. So I've been watching this. If you are watching these pairs, if you're an edge finder user and you trade currencies, Euro Kiwi, Pound Kiwi, both of them are doing something interesting. They're both right up, pressed up against key resistance. Should be an interesting one to see if we can get that breakout next week. If that breaks out, that could be an interesting story. That's pound New Zealand. Let's look at euro New Zealand as well. Again, a similar concept here. You are right up against resistance. If you get that breakout next week, that could be a nice trend continuation play. And again, you kind of have that edge finder confirmation when crossing data between the two countries. So, well, Europe, not a country, but the euro versus the Kiwi, the pound versus the Kiwi. Really interesting. What are you feeling like with all this data behind us? It's always nice. I like this period of time where we have a lot of numbers and data that we can kind of get a read on the economy, get a read on financial markets. Of course, we talk a lot about U.S. data, and I know you trade, U.S. indices, you trade gold, you trade currencies. What are your reactions to what we've been seeing recently to all those numbers?
Yeah, it's very entertaining because this week we had some very mixed numbers. Retail sales were a little bit lower, which was very great. But PPI, hey, it went up, man. So that can be a problem, especially about rates cuts. But PPI is not really that aggressive that much. I like the fact that retail sales, at least they went a little bit lower.
Sure.
But the overall structure, to me, it's fine. I mean, the market has been just moving in the same direction. It was good for actually a nice reversal. I think the dollar will eventually maybe try to go lower again. I think that PPI, they actually cancel each other with that retail sales, you see. So the thing is, now we are actually confused if maybe they're gonna postpone about cutting the rates, or maybe they will just cut the rates, or maybe they'll just wait. And if they wait, that might be a little bit bad, because it means the rates, they will be higher for quite long.
Yeah, and at the turn of the year, the market got really excited. I'm talking about, of course, the stock market, right? The equity market went crazy towards the end of the year because the idea was that the Fed was likely to cut. They even mentioned, they forecasted at the beginning of the year that they would see 3 rate cuts as appropriate. Well, here comes, we're on the cusp of turn into April here, and we have not seen one. And expectations for rate cuts have gradually been pushed back. At one point at the turn of the year, people thought it was going to be March. Here's March. We're not going to see one, most likely. So that change in narrative, what I find really personally to be a bit concerning about, Kenzo, is that in the turn of the year, we thought interest rate cuts were going to kind of come in March. That was what the market was really hopeful for. But we just went flying high on that idea. But since then, the idea for rate cuts has been pushed out, and yet the market has continued to push higher and higher and higher. So what has me a little bit concerned is this week, the data was not great. You had inflation high, as you mentioned. Retail sales was a disappointing figure, and so you have this whole picture where the economy is showing signs of potentially slowing down. At the same time, inflation is still problematic. To me, that would constitute looking for more of a pullback on the indices. And while I am longer term bullish on the indices, that's my opinion. I think they're due for a bit of a pullback. Would you agree, or do you think that there's still more upside in the meantime for things like NASDAQ, S&P, Dow? And I should also mention, I'm not interested in shorting them. I'm just saying that I think that the pullback before a buy is more interesting to me.
Yeah, you see, on this one, it's quite difficult. But on my side, I will just say I'm looking for some bullish moves. You know what I'm expecting? Next week, we're going to have those interest rates. I think they will just pause the rates. But I think the interviews, later in 30 minutes, I think they're going to be positive. Because we're expecting them to cut now. If they don't really cut now, obviously we'll have a better understanding what will happen. Obviously, the next session of Fed, I think maybe the news will be agreeing with them to cut. But now I think it's very, very early. And mostly people, they don't really care whether if they cut or they just leave the rates like that. But their statements is very powerful, because now we'll understand, oh, if they're going to cut, or maybe it's obvious that they're going to cut maybe in June or whatever, then it means where we are now, it might be the lowest level. So most likely people are going to buy some shares, or they will just continue buying. And on the other side of Nasdaq's S&P 500, I think we are at the lowest level. If maybe we will be talking about AI, I think that is the start of AI. Yes, somehow the market will be overbought, but if we can look it nicely, we can see that we are still at the early stages. So I think we're gonna see some bullish, but yes, along the way we might see some reversal. But on my side, I feel like we are still maybe going to see some reversals, especially today when the market opens. I think maybe we will see the market trying to reverse.
Yeah, and Kenzo, where I definitely agree with you overall is I do think I think it's hard to deny the early stages of a bigger push in the direction of AI. And what will be interesting too about that conversation is like where, right now chips are like the easy play, right? People are like go into semiconductors because wherever the AI revolution goes, chips are probably going to be needed. At the same time, the question is, what's going to be the next big company that can actually really seriously monetize AI? That's where things get interesting. Regardless, I think that trend will continue in things like the NASDAQ and tech-heavy areas of the market. And in a really good scenario, it will actually trickle to other areas of the market as well, where other, not tech-specific companies can still benefit dramatically from AI. That would be, a very bullish overall picture. So while I am still very much bullish on the indices, and that's where I'm most comfortable, kind of staking my claim, my point is more so just that I think that the market is getting a little bit excited right now. It's a little bit overly optimistic in terms of, the idea of AI is, of course, a real thing and a very powerful thing, but is it enough to completely squash the importance of the economic data that's been coming out that's kind of pointed towards cuts are not coming as soon or as people, well, they might come. This is the other thing. They're not coming as soon because inflation's coming down. They might start having to come sooner because the economy is slowing down. And that is a much less, in my opinion, it's a much less bullish environment for stocks. If the stock market or if the Fed is cutting rates because the economy is starting to show signs of not like recession or anything, but slowing, that is a little bit less attractive than, oh, inflation is cooling, but the economy is still chugging along, right? It's a very interesting kind of scenario there. Why is that potentially bearish for stocks? Well, in my view, part of the reason is because if the economy is slowing, that could equate to slowing in earnings for companies. And so I think that is partially my concern with the indices, especially after a straight shot to the upside. So for some time. Again, I'm saying from my perspective that I would like to be long the indices. I've just got to see a pullback first.
Yes.
And for me, I have nothing against trading this for as long as you can. Like you might be totally right. We might see like this short-term like push again for the NASDAQ in the meantime. But for me personally, just from a longer term perspective, I am waiting to see if we can get a bit of a pullback before I start getting bullish again. So again, kind of I think it's important, whatever your trading strategy is, and for listeners, the same thing goes, to have a plan to know, if you're right, Kenzo, and we make a push off this level, we continue in the meantime, I'm sure you have, and I know you have a plan in place. And if it doesn't, if we start to roll over, you have a plan in that case as well to keep yourself protected, right?
Yes. So yeah, you see, I think maybe this week it's done. So it means the main focus is going to be actually next week. So which means we're going to have a clear picture of what will actually happen. So after the conference, that will be the bigger thing. Obviously, I also think that they're not going to cut the rates not everything's actually so much stuff is not really going good on the economic side, even though we have some good stuff that can actually push the market up, like AI. But at the same time, the economy is not performing very well. So that just cancels each other. And also the rates, if the rates are higher, people they are afraid to invest when the rates are higher because the profits won't be that much. You see. So now I think the best way for us to say we're gonna continue, it's only to hear from them that okay, this time we're gonna pause with the rates, but we're sure that maybe next time we're gonna cut the rate. That will be good, even though the rates will stay the same. I think from there it's where maybe I can look for a nice buy. But it's possible also because we can be wrong. If things don't go the way we want, I think maybe we're gonna see the market breaking out. And if it breaks out, I think it's going to be a very long-term sell until we hear some positive news.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.